What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown. For the last 7 trading days, we've seen a pretty decent rally in gold miners. GDX, which is an index of gold miners, has held in an upwards trend since the beginning of March. And the low that we experienced about 7 trading days ago, it was a higher low than that which we experienced at the beginning of March. So obviously, gold and precious metal miners have been in a bear market or in a correction or in a downwards trend since August. But there are a couple of signs that make it look like things are turning around now and that they've bottomed. However, given the last recent few trading days, there are a couple of things that point to the possibility, a high possibility, that we might be due for one more sell-off in miners before we really start to get going with a new bull market. I'm going to show you exactly what those are, what I'm looking at right now to signal when this new bull market has started. Ready? Let's dive in. Now, you've all heard of people who are perma-bears, people who are perma-bulls, some people who are constantly preaching doom and gloom, and some people who are saying, to sky's the limit, things are only going to get better from here. Now, specifically regarding gold and precious metals and miners, you probably look at me as somebody who's, for the most part, pretty much has always been extremely bullish on gold, silver, and miners. I absolutely did not anticipate a rise in real interest rates, especially over the last few months, and the accompanying fall in gold, silver, and miners. And you've also probably seen many videos from me where I'm saying, hey, this looks like it's probably the bottom in gold, silver, and miners, only to have a few weeks or months pass to experience another new low. And this time I'm actually doing the opposite. I'm calling a high right now, and it looks like we're probably going to have a sell-off, which means that if the trend holds true, this is actually the bottom. No, I'm not superstitious. I'm just a little stitious. All right, so what are the 5 or 6 things that I'm looking at that make it look like the recent 7 days of trading, especially in miners, have pushed it up into kind of an extreme level, and we're about to have a sell-off here? Number 1, I'm looking at the channel. If you take a look at this chart, you can see that GDX specifically has stayed very tight within this channel since August. At the outer bounds of this channel, this is going to be the 5th time that we've tested this resistance line, and every single time, even at a couple times it looked like there was a little false breakout, we came right back down within the channel. So we're hitting right back up against that same resistance line inside the channel that we've stayed in, and so odds are there's going to be some selling here as a result of that. Things like this in technical analysis sometimes act as more of a self-fulfilling prophecy, where if all the traders and all the algorithms expect that some people or most people will sell at a certain point, then they will all sell mostly in anticipation of that, which will trigger the selling itself to actually happen. You can see here that the bottom of this trend line has held up as well. We hit the bottom of this trend line about 5 times. Last time was the beginning of March, and we've moved back towards the top. So it kind of bounces around inside this channel, and we have yet to sustain a breakout. The second thing I'm looking at is the 100-day simple moving average. Now, the major simple moving averages tend to also act as support and resistance. Not when you start detailing or crafting your own and kind of manipulating them to match up and back testing your overfitting the data, but the major ones like the 200, the 100, the 50, the 20. A lot of times these simple moving averages, the lines that they form, will act somewhat as support and resistance themselves, and so we're coming up right against that 100-day simple moving average here. So again, self-fulfilling prophecy could trigger some selling. The third thing I'm looking at is the Bollinger Bands, and these bands, this is a technical analysis tool that measures standard deviation, and so you can see here that typically a stock or an index or a price, an asset, it will move around, it'll bounce around inside these Bollinger Bands, and you can see here sometimes they expand and sometimes they tighten, and so when higher volatility in the price movement of the underlying stock or index or whatever it is, when that volatility grows, you're going to see that band widen because the standard deviation will grow from that increased movement. Very rarely do you see price action sustained outside either side of the Bollinger Bands. You very rarely see it sustained outside of the upper or the lower. Usually it'll hit somewhere around there, and just due to the fact that it takes a lot of energy both selling and buying in order to sustain movements that keep it outside that standard deviation, it means that you're going to see that kind of contract and expand over time, and the price will usually bounce off of the two. They'll bounce off the upper and the lower. So at the beginning of March, we bounced off the lower Bolly band. About halfway through, GDX came up and hit the top, then fell back down. We're butting up against that top Bolly band as well again right now. And the other thing is that you notice that these bands, they kind of oscillate. They squeeze and then they diverge. And so that shows that the volatility of the stock or the index will usually go through periods where it builds energy and then it explodes either up or down, and then it builds energy again and then it explodes. And so this is another thing that you see in technical analysis, and the Bolly bands are just going to be another way that you can visualize that pattern taking place. And so right now you're seeing we're hitting the top, and you're seeing those Bolly bands come together. So you'd expect energy starts to build up here right around in this level before it explodes outwards again. Now another indication that I'm looking at here again, and this is all short term, is the declining volume during this rally over the last 7 days. What you'd want to see if you were if you were anticipating that we'd actually have a breakout here, and that this would be, where we'd break out of this downward trend and start a new bull market, a new bull rally. What you'd expect to see is an increase in volume in this rally. You need a lot of additional buying to overcome all of these indicators that are saying sell. So you're probably going to have a lot of selling here, and so the fact that you have declining volume all the way up to the top of this trend line here, and the fact that we have all of these these natural resistance points that we're running into at this price means that the sellers are probably going to win here, and it's going to push the price back down. Now, I'm personally not anticipating a new lower low. I'm anticipating a higher low, really in accordance with the two prior lows that we've seen since the beginning of March. Over the next week or so, this would push GDX back down somewhere around the 3270 mark. This would also follow the same pattern for the Bolly bands. It would allow them to squeeze as we are going to see additional consolidation around this price level here, which would give it enough energy to build new momentum to finally break out of this channel once and for all. Once we do break out, from a long-term perspective, there is a lot of energy behind this. The fundamentals are better with gold miners than they probably have been in history, and I was accurately saying that for the last 6 to 9 months as well. They're some of the best value stocks you can buy in the entire stock market right now. They're cash machines. They've all completely deleveraged, and the macroeconomic factors that are impacting the product that they're producing, the value of the product they're producing, gold, just off the charts right now. And so I'm extremely excited for the next year and longer what gold miners are going to do. But short term, over the next couple of weeks, I would not be surprised at all to see a sell-off here, just due to the fact that we're running up into 5 or 6 different technical factors that are offering resistance here, that are saying, giving a sell signal. I would not be surprised at all to see a little bit of a sell-off over the next couple of weeks to build some final momentum, to build some final energy to finally break out of this channel. And then over the next couple of months, to see this thing, you could easily, over the next couple of weeks, we could see GDX rally to 40, 45, 50, 60. Depending on what gold does, it could go a lot higher as well. Maybe not in the next couple of months. That might be a little bit ambitious, but just given where gold is holding at right now, you could easily see GDX move up to 45, 50, no problem. Now, obviously, none of this is trading or investing advice. I'm not telling you to go out and buy this. I'm just telling you what I see on the charts, and I could be wrong. Now, to me, the risk to reward ratio with gold miners right now, and not just GDX, is a good way to look at the entire kind of like the industry as a whole, but there's some individual miners that have much better technicals right now and extremely good fundamentals right now. So I'm just using this kind of as a gauge of the overall market for miners right now. If I'm wrong, to me, it looks like the risk to reward ratio is fine. I'm not selling here in anticipation of being able to buy lower, because the chances that I'm wrong, and let's say this is, the bottom's already in and we just go up from here, I don't want to miss out on any of that. And so I'm holding, understanding that, yeah, we could have another, higher low or even another lower low. But ultimately, when this thing turns around, these are some of the best valued companies in the entire stock market right now. And so I don't care how long I have to wait. I'm not overexposed. I'm not over leveraged. And just like Warren Buffett says, the stock market is a wealth transfer mechanism that transfers wealth from the impatient to the patient. As always, I really appreciate you guys. Thanks so much for watching. Have a good day.